In your money this week, we're going to focus on what the market's focused on, and that's the AI stock story. Right now, investors are trying to figure out whether AI is a bubble, a genuine driver of strong earnings growth that you don't want to miss, or perhaps a spending arms race that's going to sow the seeds of its own demise and bring down the Mag 7 and with them the whole market. And we're also going to touch on why an unpredictable president has suddenly become quite predictable and what that means for policy in the markets going forward. Andrew, you ready to roll?
I'm ready to roll, man. Thanks for having me.
Thanks for joining me. And as always, please like the video, subscribe to the channel, check out Andrew and his team at the morning market briefing at Narwhal. They talk about the markets every day at 8:30, YouTube and podcast. And if you want more detail and anything content wise, check out my blog at the Boston Advisor, where my latest post is about whether to rent or buy a home right now, given the real estate market. So, Andrew, I feel like that this show has broken through a little bit. I don't know about you, I got text messages last week on the Juneteenth. Hey, where's the latest episode? This is the only show that all of my family agrees to listen to, and we're on a road trip. And so I had to break it to them that we weren't recording on a federal holiday. So they went back and they listened to old episodes on their drive. I
They
think
had to.
yeah, it's a smart family, by the way.
Yeah.
And then somebody was asking when it's going to be on Apple Podcasts. And I think we added like 12 subscribers in the last couple of weeks. So let's keep
It's
this
huge,
moving.
man.
Let's
Let's keep
go.
it moving. And I do have some bad news. Markets close next Friday.
Is that
So,
true? Oh, the third. Yeah.
yeah.
Prepare your travel playlist now, people, because we will not be recording on July 3rd.
No, no. I
All
mean,
right.
maybe we could do one on July 2nd. We'll see.
Yeah. We should probably end with good news since we just laid out bad news.
Yeah.
But our listeners need us. So for the last 2 years, we've been answering the question separately in our own little
Mhm.
worlds. Given all that's going on, why is the market doing so well? The answer has largely been earnings growth, as that drives markets, and the things that people see in the headlines typically do not drive markets. But, and I'm wondering, this is where we're going to get into, I think you're now starting to see conditions that could make you nervous about this bull in the short term. And the common thread is the AI story possibly fizzling out or at least becoming more complicated.
It's increasingly complicated. I feel the AI story every week is more complicated. And I'll make a few observations here. The market, as trite as it is, people don't like uncertainty. I don't know on the AI front specifically as it relates to the economy. I don't know that things are more uncertain cumulatively than they were 3 months ago, let's call it. What's changed is I think the rate at which the pockets of uncertainty are moving has gotten significantly faster. Everyone told us that AI would make things quicker and more efficient. No one told us that AI would make specific panics in the market quicker. Because that
Yeah.
that seems to where we are right now, and it's very difficult to, you want to skate where the puck is going, not where it is. It's hard to even tell where it is, so I don't know if I'm even skating to where it is, let alone where I should be skating to because it's heading there.
And that's possible because hockey's just not popular in the Atlanta area. Is that why you're confused? Or is
that,
this
that might be a lot of it.
all right? All right. So is
But
Micron's earnings this week an example of this, basically?
yeah, I mean, Micron's a perfect, and I'll tell you, we own some Micron stock. In the interest of disclosure, our clients have exposure. The one thing everyone in our office agreed on heading into Micron earnings was that it was going to move 15%. Did we think it would move up or did we think it would move down? All of us had an opinion, and all of us could be easily talked into the other side of that opinion.
Well,
And
explain
so,
Micron super quick. Like, what does it do, and what happened on the earnings, and kind of why
yes,
why we're talking about it now?
yeah. So at a very high level, Micron, they're creating memory chips. These are necessary for pretty much all of the popular AI applications right now that you might be using any of these large language models. The demand for memory is through the roof. Micron is selling more chips, yes, but more importantly, they are selling them for about 10 times what they were selling them for a year ago. Traditionally, the memory space is really driven by supply and demand. There is a ton of demand. It is not you can't just flip a switch and say, hey, we've got more supply. So they have pricing power in this particular moment. The expectation was that, hey, they sold a bunch of chips and they're selling them for high prices and there's demand for more chips. Why would that stock possibly go down if what happened did happen? Well, was the expectation too high? And Micron's commentary, I think really the reason the stock moved was, hey, we did all the things you thought we were going to do. We're selling chips for a lot more money. We're selling a lot of them. We're going to keep selling a lot of them. But notably, they extended out their guidance on how long this cycle would last. Previously, they had said, hey, we think this will last through calendar year 2026. They're now saying, hey, we kind of think this is going to keep going through 2027, all the way through next year. And that has a big ramification as you're trying to value future cash flows, because you're looking at a company that has essentially been able to increase costs to a staggering extent to where they're getting margins in the 80% range because they're selling these things for so much. And they're saying, yeah, we think we can keep ramping up and that the demand's going to stay there for at least another 18 months.
Which
What's
hurt other names.
correct? Which then means, okay, well, here's your problem. And you mentioned the Mag 7. Let's just take Apple. If Apple is having to buy memory from someone, not just, it's not like Micron's the only creator of memory chips, but if Apple is, creating the most innovative consumer facing product imaginable in the iPhone, which I still think it is in terms of mass adoption, it's probably the best product that's ever been made. They're not getting 85% margins on an iPhone. And yet they're paying a price for a memory chip to a company that's manufacturing that chip and is getting 85% margins because there's so much demand. So Apple, even this week, has come through with pretty significant price increases on a number of their products, their Macs, their iPads. Surely the iPhone, is going to get rolled into there. We've seen the prices of Xbox get released as they are going upward. We have a real imbalance. And you may say, hey, well, this is pretty easy to discern in the short term. Where's the puck going? The puck is going to a place where memory chips are more expensive, and therefore the products we have to buy are more expensive. Where it might be going, though, is that these are massive companies that have traditionally had tremendous moats and a lot of power over their suppliers. And the question is, when and how do they push back? And
yeah.
And what does a pushback look like? It looks like what we touched on just a moment ago. It looks like Micron saying, hey, this cycle where we're going to crush it through 2027, it looks like other companies that actually use these chips saying, no, we're going to rein this in, and we're either not going to buy from you or we're going to set up our own fab plants and start making our own chips.
Which is more investment, right? So from a Goldman Sachs note that I shared in this week's Wednesday reading list, the concern was summarized this way, that basically AI spending has helped push big US company profits to record levels, especially a small group of the giant tech firms and the chip makers. Those are the names that have really powered the index higher. Not entirely, but they're a big part
For the
of
most
it.
part.
Yeah, and those same companies are now pouring so much money into AI data centers, hardware, chips, that their costs, their debt, their assets are growing up. We talked about Google issuing debt or issuing equity, sorry. That could pull their profitability, their return on equity down over the next few years, unless they can grow their earnings even faster than they have been. And then you extend that because that small group of companies makes up such a large share of the S&P, that can drag down the market's overall profitability and in turn valuations. So that's kind of the synthesis or the gist of the thesis about why you could be concerned about what's going on. I guess the second part to me is,
but real quick, Sammy, let me just underscore that. I think there is reason to be concerned about exactly the scenario you just laid out. There wasn't reason to be concerned about it 3 months ago.
Yeah,
because it hadn't happened yet, and there were still an equally valid reason to be concerned about the AI space. But it was just, 3 months ago, we were talking about the software companies, and man, those guys are getting hammered. Now we're sitting here talking about, man, what's going to happen for Apple and Microsoft? We've really seen a rapid race to newly declining outlooks.
Yeah. No, and this is against a backdrop of profit margins being at extremely high levels, right? Which has propelled this market earnings growth. So, kind of, to continue the point, I guess I was going to say a separate point, but really to continue it, there's this view, and Jeremy Grantham from GMO laid it out on a podcast I was listening to, the Odd Lots podcast, one of my favorite ones from Bloomberg. And he was making the argument that markets have kind of underappreciated this shift in how big tech is competing. And not to go on, but essentially the Mag 7 all had their separate monopolistic businesses.
Mhm.
Apple, consumer electronics, Microsoft, enterprise software, Amazon, et cetera, et cetera. And now he's saying that these companies are converging and competing in their race to dominate AI. So they're competing with each other, whereas before they were not necessarily. And is that a risk to these names? And I guess I would say to you also, what's the end product that they're racing for? I mean, I feel like they're inventing something, but how are they monetizing this? Because it doesn't seem like there is a product there yet.
I completely agree with that concern. I think that they've all largely followed the playbook of let's spend as much money as possible on a capex basis. So capital expenditures, reinvesting, buying things, building data centers, whatever it may be. The staggering scale of which that has ramped up in the last 12 months is unbelievable. But they all seem to be marching towards this relatively overly generalized goal of dominating AI.
Right.
But what does that mean and what is it? Because they're kind of exactly to your point. They're merging from, hey, I'm Apple and I make really fancy smartphones, and hey, I'm Meta and I own Instagram and Facebook. And those are starting to kind of merge into this need to dominate in the AI space. And the reality is the applications should not be the same, but the expectation from the market has been such that if you're not spending in this avenue, we are going to discount you. There were a number of these firms that were slower to massively upgrade their capex spend, and the market punished them for it. Notably, people have kind of forgotten about this, but Apple got absolutely hammered on the Siri 2.0 AI rollout not being as robust and as quick as analysts wanted it to be. In other words, you didn't spend enough on AI. We don't like this. Now they're all spending a ton on it, and we don't really know what we're getting for it. I think it's absolutely a concern. I'm curious. I feel like Meta, if I had to pick one that seems maybe slightly differentiated, Meta seems to be trying some different stuff. Now, different stuff from what the other Mag 7 companies are doing. But I mean, Meta, I'm not sure if you saw this, but they're rolling out a predictions market app. I'm not in favor of another predictions market app. I will tell you, though, if we are leveraging AI and all the data that Meta has on consumers, it will be the dominant prediction markets app. It's going to be significantly more robust than anything that Kalshi or Polymarket or Predictit or even DraftKings that's rolling out their prediction market app. It's going to be significantly more robust because they know so much more and they have better technology. So again, am I for that morally? Like, no, not. I'm not. As a business use case, maybe this justifies some of the spend. I don't know that I'm seeing that from everybody else, though.
Yeah. Well, this is why, I had a friend text me the other day. I hadn't heard from him in a long, long time. And he said, hey, that guy that you do those videos with, he sounds like he knows really what he's talking about. Um, he didn't say anything about the guy he was texting knowing what he was talking
Yeah,
about. It
that's
was just
tough.
like, hey, that guy, let him know he's really good. So that was a low moment for me, but I was happy for you.
Thank you. Thank you.
Yeah. So we're concerned, right?
Mhm.
This is why we've been telling you to diversify for a while now, right? Check your exposure, see how much you own in these names. You can look it up online. You can do different things. We've been looking at the equal weight S&P. I've been talking to you about international markets. You've been talking about fixed income. You don't need to abandon AI, and you definitely don't need to call the top because you won't succeed
No.
in either endeavor. but you don't want your portfolio outcome to be entirely dependent on a handful of companies. And if you've been complacent looking at your portfolio and a passive investor, or entrusting the portfolio to somebody else, you may not know what you own, and you do not want to be trapped if, again, it comes down to earnings growth. If earnings growth slows down because of all that we've been talking about. So I know that you wanted to highlight something specifically in what I said there, which was strong bond performance that we've seen lately.
Yeah, I will say, kind of as a segue into that, this is a great reminder that the stock market is not the economy. I am concerned about the stock market, which obviously in some way, shape, or form is a bit of a read through on the economy, but I don't think they move in lockstep. I have a little bit more comfort in the economy at large, and we got some data coming in this week that the market seemed, especially on the fixed income side, to take appropriately, which the inflation fears, they seem to be playing out as I would have expected them to once there was something closer to a resolution with the war. We're seeing oil prices come down.
Yeah.
Even the most recent read on PCE, there were areas in which it was lower than expected, though tonally it was pretty much right in line with expectation. The win there was that it was not higher. And we have seen good movement in bonds. We have seen, if we think back to kind of when we first started doing these conversations, Sammy, I think I noted, you could probably timestamp it, but I think, 4 months ago, whenever it was, hey, the 10-year just seems really range bound between 420 and 430. Well, that changed really quickly when a war broke out and the Strait of Hormuz, was shut down, oil prices went through, and inflation fears came right back into it. We saw the 10-year go up to 469, I think. That was the peak. We've seen it fall off significantly, which again, if the yield is falling, it means the price is rising. If you held those bonds,
Yep.
I would not advocate that it's a bad time to buy bonds now. I hope you bought them when you and I first started telling people to do it.
Yeah, I think it was a good way to explain the risk and return expectations from fixed income. The yield is decent right now. The yields are good.
Yeah.
Yields had gone up, price coming down. If you didn't believe we were in a continuing escalating rising rate environment, you would pick up some price appreciation. And we weren't talking about a shift from stocks to bonds, whole cloth in your portfolio. But if you hadn't rebalanced in a while and you could add some fixed income exposure and stay within the right risk return band for your situation, it probably made sense. And that's just kind of closing the loop on that conversation. So that's AI. I think it's going to be something we're looking at and talking about a lot, which is I think people are having a little bit of fatigue in the outside world about it, but it's definitely the market is focused on it and investors should be focused on it.
Yep. I think so. And I would give one, I guess this is certainly not investment advice. Don't go take action based on this. My prediction would be that I think people are really focused and really worried about the Mag 7 right now. I would be a lot more concerned about an outsized position in a memory chip company right now. Do I think it's going to crash tomorrow? No, but this is a time and time again we've seen
just because of the huge run up and
we've seen the chip cycle play out. You might think, hey, it's great that SK Hynix is doubling their capabilities, and other people think they actually need to be doing more than that. You might say, wow, what a great sustainable business. Well, right now, there is way more demand than there is supply. The likely future for these companies is that they are going to over increase supply. And at some point, they're going to have a glut of inventory. Prices will crash. I've seen this play out with Micron 2 or 3 times the full cycle in my career. That's going to happen. Am I saying it's going to happen right now? No, but that will come.
Rebalance, diversify, don't chase performance.
Yep.
So let's shift to politics without shifting to politics. I think I texted you after this memorandum of understanding came out on the Iran war, and I said, I don't really understand this agreement. And you said, it's really not an agreement.
I don't know what it is. It's just like
yeah, it's something. And so in my view, and I'm not asking you necessarily to endorse this, but I do want to hear what you think. I feel like the election cycle coming up has made a very unpredictable president predictable. And what I mean by that, I think a little bit of survival mode, survival instincts. If the Republicans lose the House, you're going to see an uptick in investigations of the president's family, perhaps impeachment. Impeachment means you go to the Senate, and the Senate, you need enough senators sympathetic to you to get acquitted. What does that all mean? Like, why am I saying this? It means that, um, him not uh, signing this housing bill, whether you like the housing bill or not, so that he could get a voter ID bill check, to that thesis. Not having a real stomach to continue the Iran conflict, even though I don't think it should have started to begin with, and I definitely didn't want to see it continue. Again, gas prices, inflation, economic concerns, don't want to head into midterms with that. Some of the stuff that he's been doing in these Republican senatorial primaries to just get more favorable candidates to his view elected. That's my overview of what's going on. And I think if you agree with it, you can just apply that lens to what do I think is going to come out of this administration over the next 5 months? What will help the GOP hold the House and get more seats in the Senate?
I think you're right with one caveat. I think you're right in a lot of lenses in the sense that there certainly seems to have been a pivot from Trump to where he's now doing the much more obvious thing. Um, the concern I would have with reading too much into that is it has been short term. And as you alluded to earlier, it has an unpredictable person now become quite predictable. I would be hesitant to say yes, and we should expect that to continue given the nature that, by definition, he's been quite unpredictable. I do not characterize Trump as someone that is really known for or has a desire to be politically disciplined. Whether you're looking at a speech he gives or a rally or the way he answers something one day versus the other, he's not an incredibly disciplined guy. He's not good at staying disciplined for long. I don't know that he has the longevity because I certainly feel like since the Iran thing calmed down, I'm doing air quotes if you're just listening. I feel like he's playing a much more classic playbook heading into a midterm. I don't know that I would expect him to be able to do that for the next 5 months.
Yeah,
So
no,
I
that's
think
that's
I
fair.
think we may
Yeah,
get some more wild cards. That being said, if you think about the economy, what are the priorities for any president, whether it was Trump or somebody else right now? I mean, they want to get prices down. The reality is that's happening very, very quickly with oil. I mean, he's threatening to look into the gas stations who are still gouging people at the pumps when oil has fallen. I will assume that that's a politically motivated post on Truth Social, not a misunderstanding of how oil prices work. But notably, just so everybody out there knows, a barrel of oil is not what you put in your car. um, so, so,
yes,
so these things, it would be quite strange if they literally moved in lockstep.
yeah.
But yeah, I'm curious to see, how long he can kind of stay on message and in an odd way, I'm curious specifically on the conflict with Iran, how quickly he tries to just like push it out of the window. Because I think when you really think about that scenario, the memorandum of understanding, I kind of took it as here's a bunch of points that neither side would really like all of the conditions in place, and we have made a commitment to continue talking, even though we have been talking. That's how I was like, this means nothing.
Means nothing.
Um, so
What it means to me, if my thesis is correct, is that we're not re-escalating this conflict.
I hope that is the case. I will say, Tom, on our morning market briefing this morning, made this point. I wasn't even on the call, but I was listening to it. I thought it was so astute. Ben asked him a pretty simple question of like, Tom, what are you looking forward to next week? And Tom made the note. He's like, well, last Friday we left and the war was over, and we came back to work on Monday, and the strait was closed again. So he's like, I'm just trying to make it to Monday. I'm not ready to look past the weekend. So I mean, who knows? We may have completely new information Monday morning.
Correct. Yeah, this thing could hit your email inbox, and World War III could have erupted. But
Yeah.
I'm going with.
I'm rooting against that, by the way.
Yeah, we are rooting against that. We're not so desperate for content that we need to see something like this happen. But as I think through things, I feel like the president is trying to survive post midterms, and we'll see if I'm right. And what that has to do with your portfolio, it could make things a little bit more predictable. But we'll see. You raise some great red flags on that one. So I'll get out of you. I'll get out of your way and out of your hair on that. Reminder: please subscribe to the channel. Check out Andrew and his team. Thanks for listening, everyone. Andrew, have a great weekend, buddy.
Y'all have a good one.